All right, today we're going to break down the powerful case from a really well-known analyst, David Morgan. He believes silver is on the brink of a truly historic move. So let's get right into the logic behind his pretty stunning prediction. And he kicks things off with this incredibly bold statement, a 300% move in under 3 years. I mean, a price jump like that sounds extreme, right? So the big question is, how could that possibly happen? Well, according to Morgan, the answer starts with the fact that most of us fundamentally misunderstand what silver even is in today's world. Okay, so first things first, we have to totally re-examine what we think of as silver's role in the world. This isn't just about your grandmother's silverware or some old coins anymore. Its identity has completely changed, and that change is the absolute bedrock of this entire thesis. Morgan doesn't mince words here. He argues that besides energy, silver is the single most critical commodity for our modern way of life. It's not just important. He says it's flat out irreplaceable. Let's dig into why. The whole perception of silver is doing a complete 180. For centuries, yeah, it was money, it was jewelry, but today, it's an indispensable industrial metal. Think about it. It's the #1 conductor of electricity, which means it is the secret sauce in everything driving our future. We're talking solar panels, EVs, 5G, and the enormous data centers that are powering this whole AI revolution. So, that brings us to the demand side of the story. This new reality for silver isn't just some fun factoid. It's creating a historic surge in consumption, the likes of which the market has literally never seen before. And this is where it gets really wild. For the very first time in history, industrial demand by itself is set to eat up the entire world's annual silver supply. And that includes all the silver from mining and recycling combined. So before a single ounce even gets considered for a coin, a bar, or a piece of jewelry, we're already in the red. So you gotta ask, right? If demand is higher than what we're pulling out of the ground and recycling, where does that extra silver come from? Well, it has to be pulled from the world's existing inventories, the stockpiles that have been built up over decades. The problem is, those stockpiles aren't infinite. And according to Morgan, they are shrinking fast. And this leads us perfectly into the supply side of the equation. Because it's not just that supply is getting tight, it's where the supply is tight that makes this situation so unique and, honestly, potentially explosive. Now, to really get this, you have to understand that there are basically 2 different silver markets. There's the small retail market, about 20% of the whole pie. That's what most of us know, coins, small bars, that kind of thing. But the real engine room, the other 80%, is the massive commercial market. We're talking those huge 1,000-ounce bars for industry, for ETFs, and for the big-time investors. And this, right here, is the absolute core of Morgan's argument. In the past, sure, we've seen shortages on the retail side. You'd hear about delays shipping silver coins. But this time is completely different. The tightness, the real squeeze is happening in that massive commercial market. The very heart of the system is under strain. Now, you might look at the official number for the global silver inventory, 3.6 billion ounces, and think, well, hold on, there's plenty to go around. But Morgan argues that this big headline number is incredibly misleading. The real amount of silver that's actually up for grabs is way, way smaller. So let's do the math his way. First, you take that 3.6 billion ounces and you subtract the 2 billion ounces that are held by retail investors in coins and stuff. I mean, those are in very strong hands. They're not coming to the market anytime soon. Then you subtract another 800 million ounces that are locked away inside ETFs. That silver is already spoken for. So after you make those deductions, that huge 3.6 billion ounce number just collapses. It falls all the way down to just 500 million ounces. This is what Morgan calls the free float, the actual real pool of commercial silver that's available for the entire world to fight over. To put that in perspective, that's less than half of what industry needs for just 1 year. Okay, let's recap. We've got this surging, non-negotiable industrial demand crashing head-on into a critically tight physical supply. So, the next logical question is, what does this pressure cooker scenario actually mean for the price? Morgan gives us a few ways to think about this. His bare minimum target is over $100. For some historical context, if you take the all-time high from 1980 and adjust it for today's official inflation number, you get about $120. But, and this is the real kicker, the way we calculate inflation has totally changed. If you use the same math they used back in 1980, that old all-time high is equivalent to over $600 today. And that context really helps frame his short-term call for $50 to $150. And if all that wasn't enough, Morgan believes there's a powerful accelerant that could just pour gasoline on this fire: a currency crisis. If people start to lose faith in the buying power of their dollars or their euros, they almost always flee to hard assets. This would unleash a whole new wave of investment demand right on top of that already strained industrial demand. So this brings us to the final wild card in this whole thing. What happens when governments suddenly wake up and realize that their defense industries, their green energy plans, and their entire tech infrastructure are completely dependent on a metal that they don't control and can't get enough of? Well, Morgan says government intervention is a very real possibility. Silver is already on the official critical minerals list for national defense. If this squeeze gets tight enough, you could see governments step in to secure their own supply. Maybe they'd redirect it to strategic sectors or even offer tax breaks to get the public to sell their silver holdings, which, of course, would just create another massive source of demand. And that's really what it all boils down to. David Morgan's entire case is built on this fundamental collision course. You have this unstoppable, insatiable demand from a technological world that literally cannot function without it, meeting a supply structure that is fundamentally strained, maybe even broken, and tighter than it has ever been. His argument just leaves us with one simple question to ponder: what happens next?